Time for the market report. Seems prices on the upswing.
That's right, Mike. Looks like some bearish commodities now getting a second look, and we'll get into it. But first, the numbers. What were the week's biggest gains and losses? And then an overview of the timber industry in Mississippi and its contributions to local communities. And finally, a deeper dive into row crops. An expert tells us what's moving the markets. So, markets closed on the upswing, livestock the only real hit while row crops gaining. Let's take a look. The week's biggest gain, lumber, up 24 bucks, nearly a 4% increase from the previous week. The week's biggest loss, sugar, down over half a cent. That's nearly a 4% decrease from the previous week. So we've seen lumber prices continuously rise over the last few months. Looks like demand is still outpacing supply. But what exactly goes into getting that lumber to the market? At the Wood Magic Science Fair, I ran into Dr. Dan Hueber, who gave me a thorough rundown.
You have landowners that have trees that when they get cut, you get money that flows into small town banks and has an economic multiplier there. They get shipped to someplace, either a paper mill, a sawmill, an OSB plant that employs people, and that puts money in those local communities. And then the lumber and products oftentimes flow out of state. That brings money back into the state to go in those banks and whatnot to pay landowners for their timber. So the impact is tremendous that forestry has in our state economy.
In our row report this week, another update on grain crops. Analyst Dan Hueber thinks the bearish market situation we've had this year may finally be seeing a turnaround. However, he suggests that this year's crops and the trading situation are looking pretty good. We start with wheat and why prices are seeing a slight rally.
I'm going to tend to think it's going to be the former, that we finally are seeing markets not being able to kept under pressure. I mean, not that we've rallied significantly by any stretch of the imagination, but for the group, that was the first weekly higher close, I think, in 4 weeks. And again, certainly 1 week doesn't make a bottom, but again, we've reached levels that we seem to have some value buying in there. What's really the incentive for the bear, I guess, at this point? I mean, we've factored in so much bearish news. In fact, if anything, we're hearing continued, and granted, no official word from the USDA, but we're hearing corn yields probably a little bit disappointing as compared to what expectations were. So, like once you factor all that negative news in there, why hang around? I mean, if you're looking to enhance your earnings for the year, you're going to look for another pasture that's a little greener than the one we're in. So I think it's like I say, the incentive to remain a big bear at this point is becoming less and less every day. I think it's going to be still a solid corn crop. Even in our area, the farmers I've spoken with say, they're good yields. I mean, hardly anything to be disappointed about other than in comparison to where the price levels are at this point in time. So, yeah, not that there won't be some problems here or there, but it's just not the records that we factored in. So it's, and again, when we were talking 186, almost 187 bushel the acre, when you trim back 2 or 3 bushel the acre, then that can shift that balance sheet significantly. And even there, when you really look at the carryout numbers that are projected, domestically they're saying we're going to have 2.1 billion bushels of corn before we start ratcheting back yields. Will we actually get above 2 billion bushels? I think that's pretty debatable at this point. So when you look at it on the stocks to usage ratio, it's pretty standard. We've been this level for the last 2 to 3 years. Of course, most piles tend to want to be picked up by the spring. Corn, regardless if it's even got moisture in it or not, will like to sprout in the spring. So I think we'll get it off the ground. I mean, that's of course, the rule number one, or the objective number one for a grain elevator operator. It's, tell me what the weather's going to be. Are we going to have a wet, warm winter? If that's the case, then we've got a problem. But if it's a normal winter, then, probably not a big issue. But, I think we were at the point in corn where, domestic usage is still pretty solid. I mean, granted, there's no huge incentive to really kick up or increase production of ethanol at this point in time. But on the same token, the economy continues to churn along. So I mean, domestic usage is going to remain pretty strong. Not that we couldn't get some upsets in the livestock market as we move along. And I mean, granted, we're now just getting back into the flu season, and of course, referring to poultry flu. I mean, are we going to see that flare up again this winter? That's a great unknown. But all things equal, I think we pushed it too far to the downside, we need to start recovering back to the higher. So, and realistically, you look at the soybean market, it hasn't gone anywhere for 2 years. So we've been really kind of stuck in a 950, 1050 kind of zone on the front side of the futures. Maybe we can get up and challenge that upper range. You know, one thing about the soybean market, we've of course certainly grown accustomed to not having China in the market. That's the expectation at this point in time. Now, China probably needs to buy 8-9 million metric tons of beans between now and January to kind of fill out the period between here and the new crop of South American. If that does turn around, we have a little bit of a trade agreement. So the surprise then is, of course, friendly. So, you know, not that takes beans to the moon, but, you know, we could at least push back to that higher side of the range.
And that's it for a deeper look into the markets. Seems grain's having a small rally right now, while livestock finally cutting back a bit.